For more on the markets and these unsettled banks, let's bring in Peter Kraus. He's chairman and CEO of Aperture Investors. Peter, good morning. It's good to see you. And we don't like to see these regional banks still under pressure. What's your reaction to that?
Yeah. Well, it's been a complex environment, not to say the least. And you've been discussing it for the last hour. I think that the banking sector worldwide is going to be under some pressure until there is some clarity with regard to liquidity concerns. And in Europe, with regards to both counterparty risk in these large banks and net interest rate margin. And one of the things that's happening in the European banks, and I was in Europe all last week, is that the net interest margins that the European banks earn on deposits is shrinking. And it's certainly not going to go up as it has been in the last year. And that's having a very negative effect on equities in European banks, which had a significant increase in the last 6 to 9 months.
Right. So, and by the way, some have argued that European banks are in better shape on that front because of the TLTROs. It's a long story, but is the structure there more favorable towards safer and higher earning banks, or is that a laughable idea?
Well, it's not laughable. Look, the banking structure in the world is complex. It's not subject to simple analysis, and it's hard to discuss it intelligently in a short period of time. But European banks have a relatively stable loan book and a pretty large wholesale book that sits on top of that. That wholesale book is made up of deposits, some wholesale borrowings, and then a lot of deposits with the ECB. And that ECB deposit actually produces a positive return. And that's been new for the banks in the last 9 months as you went to positive interest rates, and that's been driving NIM. That's likely going to slow down, as I said, or perhaps even decrease, and that's having a very negative effect on those banks' stock prices, given how much they've run. In the U.S., you don't have that structure. In the U.S., you have these very large banks like Bank of America, Citibank, J.P. Morgan. They run much more industrial-type businesses where they're lending, borrowing deposits. They have some wholesale funding. But their capital requirements have actually moved them away from lending and are on margin actually buying securities and producing the same kind of arbitrage. That's why private capital has grown as much as it has.
So one of the issues, and Andrew and others have raised this, Peter, but what does that mean for the future of lending, extending loans throughout sort of the small and regional bank customer set of America? You have to still. Who else is going to serve these communities? Look, I can tell you firsthand, when people have tried to start a business in sort of non-thrilling places, if you try to go to Chase and open a business account, good luck to you. I mean, there's a reason why the Big Five, they can't serve the entire country. And if it comes down to that, and that's all that we have, there is going to be a knock-on GDP effect.
Yeah, Kelly, look, you need regional banks and you need large banks. We have both. We don't want to squeeze regional banks out of business. We don't want large banks to take over regional banks because, to your point, they won't service the communities. You have a deposit construct for regional banks. The deposit constructs include some insured, lots of uninsured. What the Fed did this weekend, I thought, was exactly what their tools provided them to do and exactly how it was designed to deal with it. We are not going to guarantee uninsured deposits. That's a moral hazard. That doesn't make any sense. We're going to wipe out equity and note holders and bondholders if the bank's management does a poor job. That's the risk of investing in a bank. This is not a riskless business. We need community banks, and we don't want to merge them into large banks. We probably need slightly better regulation, not regulation, but oversight in the regional side and stress testing, but it's not going to solve bank runs. They're going to happen. It's like
Peter,